Hey, Urgent Alert traders, welcome to your trade of the week and also our portfolio review. Wanted to get through yesterday and today with all the festivities and everything going on here in the United States. Just a great day to be an American. It doesn't matter your political stripe, even if you're out breaking windows in Washington, D.C. right now at Starbucks. I mean, that really says a lot. My memory fails me, but I can't remember 8 years ago, a bunch of people rioting when Barack Obama was sworn in. So really does show the promise of the United States when we, the first African-American president elected in our nation's history. And nobody had a problem with that. You still respect the office. You might not respect the man, but you respect the office. So our 8-year failed experiment is over. We're $20 in debt, but we got a clean piece of paper. The president used the word I 3 times and we 45 times. And the former president, you could invert those numbers. He'd say I 45 times and we a little bit. So it's very refreshing. I'm extremely fired up. Make sure you watch today's sit rep because I kind of give a what's going on today. Not going to cover too much of that stuff again because I want to do our portfolio review and get on our new trade. Net, happy with the Urgent Alert performance year to date. Obviously taking some hits, quote unquote, on VXX hedges, but at the end of the day, remember with hedges, when I use the word hedge, to me it's a set it and forget it. I keep it on just like an ejection seat in the F-18. I never pulled that ejection seat out and said, hey, get me 800 pounds more of gas because I know I'm not going to get killed on this mission or get shot down. That's just plain stupidity. If these VXX positions were trades, a trade is I want to make money. Damn right, I better make money. I'm trading it. If I'm hedging it, that's the cost of doing business. If I, quote, lose money on a hedge, that means I made money on other stuff, my longs, because volatility didn't spike or the market didn't pull back. Okay, so I've discussed that a lot this week and recently. I think everybody has a pretty clear delineation between those two things now heading forward. If I didn't make that blindingly clear over the past 6-7 years, I will do it again, and I'll keep doing that. All right, Disney. This thing went from zero to hero pretty damn quickly. It's up $3,100. This went from a very, very bullish on Disney to a neutral to a I would look at a Jan 19 trade on Disney. Long call diagonal with a protective put or a synthetic covered call with a protective put. And my sentence for the past couple weeks has been watch the training videos. That I gave you $495, that's on Uncle Wiz here to hook you up. So I can save time in the live trade briefs or save time on this and not say, hey, here's 20 minutes of a long call diagonal with a protective put. Here's the difference between that and synthetic stock. All I can say is go watch the training videos. Incredible run out of Disney of late. The Rogue One, just their movie inventory and what's coming out is phenomenal. ESPN is the albatross around their neck. I think they either get rid of it or it kind of atrophies away on its by itself. But very, very nice run. From a bottom of around 90, 91 in the fall there, all the way back up to nearly 110 here. Love the position now, obviously. So here's my current trade. I'll open it up for you. Okay. I'm short 10 of the 108 calls that expire today, and look at these. These made a nice. This is why I love these long call diagonals with a protected put. $880, folks. Just put that right in your pocket. So even if Disney had leveled off here and moved sideways, I collected $880 while your neighbor who's long Disney stock sat there and said, this move in sideways, Disney is doing nothing for me. It's doing something for us. We're making money. I'm long 10 of the Jan 1870 calls. Those were deep in the money 80 Delta calls, and now they are held to the chief. They are 1 Delta calls. So as Disney goes up $1, our options prices go up $1 there. And I have disaster puts at 80. So I can close these 108s for max profit here, or you can let them expire worthless today. I just hate that term, let them expire worthless, because you never know what could happen. Donald Trump, hey, Mr. President, in your first press conference, what are you going to do? I'm going to Disneyland. And then Disney gives him a lot of money and the Disney stock pops. So, but let's roll these up and out. I really think Disney's going to kind of take off and, start to consolidate here before another leg up. Let's check out when earnings are and make sure I'm not flying into an earnings announcement. February 7th, it says confirmed, and we know that we don't have to trust Options House, Trade Monster, E-Trade, whatever the hell they are called today. The only place to confirm earnings is on the investor relations website for Disney. But in this case, they're pretty good to go. To February 7th. So let's take a look. How many contracts did I have? 10 of them. So options. I'm not going to let the leash too far out. Let's go 2 weeks. I'm starting to walk out now that I feel confident. In the past year, folks, ever since that January implosion last year, and all over the place from Fed stuff, elections, wars, oil implosion, I started selling front month weeklies, keeping the alligator closer to the boat. Now I'm going to let the leash out a little bit. I mean, if you were here 2, 3, 4 years ago, I'd go out a month from now. At the March, or I'm sorry, middle of February for my front month upside calls. So let's roll them out. Let's go out to February 10th here. So actually, I need to close these, obviously. Don't want to be, so close adjust. The 108s, let's click roll up and out because they're the 108s. Add edit legs. So I'm buying to close 10 of today's 108s. I'm going to sell to open let's go past the highs here. I'm going to go up to the, let me get my expiration right first. Nice job, Wiz. February 3rd. And let's go up to the, see if there's premium in the 110s there. Yeah, there's 26 cents, $260. Little, putting the leash out a little bit because we saw it on a tear. Now it's starting to it's not stagnating. It's still on a little bit of a climb schedule. So remember, as I say in the training videos, if it's on a little bit of a climb schedule, I sell maybe 7.5 to 10% out of the money. If we're flat, short calls 2.5 to 5% out of the money above the stock price, obviously. Okay, so we'll get that order down range. FXI, another one of those, was nervous for a little while, but now I'm not. Here's the Jan 18 trade on FXI. I'm short to 36.5. And as we talked about in the primary live trade brief this week, I think I was short 36.5. I was just in that portfolio on those FXI. So those are looking pretty good at max profit. I'm long 15 of the Jan 18 25 disaster puts and the 26 calls. So that position went from being a little bit of a loser there when I said, hey, get out of FXI. It bottomed out and then popped, and we'll take a look at the chart here in a second. And then this position's up $3,100. So as I say each week, as I review the portfolio, I'm drag racing these two positions. Why? Because this is a synthetic covered call right now. I have synthetic stock or synthetic ETF. Let me just say stock. When you short puts and your long calls with the same expiration and same strike, that gives you a synthetic stock position. Disaster puts at 26 and short these 36.5 makes what? This is the same P&L diagram as synthetic stock. So what do I mean when I say I'm drag racing this? Look at the percentage and dollar gain in the synthetic stock over the long call diagonal. You pay to play though. If you want to do synthetic stock and start seeing profits immediately or losses, you pay up a little bit. If you want to, kind of deploy that potential synthetic stock capital that'll be tied up somewhere else, maybe you do a cheaper long call diagonal that hopefully eventually catches up to a 1 delta, right? And becomes the mirror of synthetic stock. So I know everybody is giving me vertical head nods, you know what I'm talking about. So again, just like with Disney, I'm banking $400 on these short calls. So we have 25 total. So let's take a look at the chart. Nothing today, nothing in the inaugural speech about trade war with China. It was a very nationalistic speech. I get it, man. I'm already looking at liberal commentators with their heads exploding and very this, very that. And hey, man, the guy's a negotiator. That speech was his opening position. If you think he's going to stick to all of that stuff, you're a fool. Oh, well, so he's lying? No, he isn't. He's a negotiator. You don't come into a car dealership and go, I love this car. How much is it? 45 grand? Done. I might even give you an extra grand as a tip. What are you, stupid? So I think this little bit of a pullback in FXI, like I told you in the PLTB, is expected. Even some of our allies listening to that speech might be like, yeah, wow, that had a little sting to it. Yeah, it did. If you're an ally that we've been protecting for 40, 45 years, it might be time for you to pick up a little bit of the load, man. We got 50,000 homeless veterans sleeping on our street. Why don't we take the foreign aid that we give to Egypt each year and house our homeless? What a notion. So I think as the first 100 days go on here, again, I'm going to go out about 3 weeks. I think FXI moves to the right here, kind of giving us a square root here, down, up, sideways. All right, so 15 contracts. Let's close adjust. It would be 25. We're going to I'll roll up and out, maybe up to 37. So let's add edit legs because we got to put 20. I have to put 25 in here since I have 10 and 15. I'm buying to close 25 of the Jan 17s. Let's go out to that February 3rd expiration. And let's do I'll do the 37s. I mean, we're $1.90 or 70 cents away from that. That would be a pretty big recovery for FXI. So let's keep them a little closer to the boat and fire those off. All right, JP Morgan. Guys, I mean, our JP Morgan money. We are printing money with our Goldman's, with our JP Morgan positions in the urgent alert. $22,000 in this trade. And this one, the newer one's up $3,200. Let me show the chart first on this one and not get out of whack. So to be expected, rip your face off rally, which we predicted on the election. Some consolidation. Is this guy for real? Nice. Hey, these are his nominees. This is awesome. And then we're moving sideways. They crushed earnings, folks. And earnings, whether it was Goldman Sachs or JP Morgan, crushing it, it sold off on the news. Now you know I don't trade earnings a lot. It's very frustrating. I stopped doing it almost decades ago with wait a minute, I was right. They crushed earnings and the stock sold off because there's a lot of heat in this thing anyway. Selling off and time to reestablish new positions. So the way we trade these long positions is the front month. I hold the underlying longs. Somebody was like, hey, Goldman, in the ready room, hey, Goldman Sachs is really pulling back here. What are we doing? I'm like, what do you mean, what are we doing? This trade's out to 2 years from now, man. What am I doing is keeping the underlying, and if it pulls back like this, using it as an opportunity to get even longer. So I love JP Morgan. I think, again, it's time for words, not action. So, half this pullback here is around the 86s. So, again, let's go out that far in time. Let me show you what the newest or the newer JP Morgan position is, just to refresh everybody's memory, since new folks might be in this one. I'm short the 90 calls to today, or out to next Friday, and obviously those are fine, max profit. Long the 60 calls and long disaster puts at 65. So this is the newer one. And then for those folks who have been here a little longer, this is the one that's printing money. I mean, this trade's been on 8 months, I think. And what's that? 8 times 3? Yeah, about 3. This trade's averaging $3,000 a month. Short the 90s, long the 40 puts, long the 42.5 calls. This is out to Jan 18. So I have total of what? 10 and 10. Okay, so that's 20. Close adjust. Add edit legs. I'm going to roll down and out, obviously, to those 86s out to February 3rd. 20 of them. The Feb 3rds. Uh, 86, as I said. Let's see the premium in those. 28 cents. Beats a stick in my eye for a couple of weeks of work. And again, I'm giving a little bit of padding here because, this really is uncharted territory. Who knows what the hell's going to happen next, but hopefully it's what happens next is all action out of the administration. And Steve Mnuchin gets confirmed. A very contentious hearing the other day. Some awful people, but I'll leave it at that. VXX, like I said, some of you might have been maneuvering these around and this, that, and the other thing. The one's going to expire today. Quote for max loss. Again, I don't like looking at that, but I like looking at all these. As a hedge, it didn't lose money. It kept me safe, kept my portfolio safe, helped me sleep at night. If you're trading it, you might have to maneuver those around or anything like that. Or if it's way deep in the money, you don't want to get some ETF shares when you wake up out of the blue. Go ahead and manage that. Here's the XLF position in the urgent alert portfolio. Out to Jan 18, it's essentially flat. 15 of the Jan 18, 17 disaster puts, and long the 18 calls. The XLF chart, shockingly, is going to look exactly like the JP Morgan chart. Flat, rip your face off rally, consolidate, move sideways, a little pullback on financial earnings here, and we're going to go up eventually. eventually. Do I know when? Nah. But in the next 100 days, when a lot of these Goldman Sachs guys and gals get confirmed and they're in the cabinet and start saying stuff like, we're going to do this, we're going to do that, I think the financials get ready to run. Okay, so the XLF, I believe I have 15 contracts here. I do. Options chain. And there's even going out to like February 3rd here, there really isn't a ton of premium, even going right at the money here. The 23.5, but that, a 43-cent move is a big move in the XLF. So I'll do those. Those I will kind of bring closer to the boat as far as premium or strike. Okay. All right. So new trade. Love getting back in the SPX here. Great track record year to date on SPX. Feeling very, very good about how we feel about the overall market and what it's looking like here. So everybody knows the history of this. Here's this, this kind of big move, beginning of the year, yay, and then we're just flat. We were flat going into the end of the year. Here's that sell-off with Steve, Moose, and Rocco on the floor in between Christmas and New Year's. No volume. A little bit of a pullback there, and we went right back up to this resistance level of this, 2270. But I like a bull put spread here. There's nothing really on the radar that's barring some sort of black swan that's going to pull us back and hit us pretty hard. So I like a bull put spread. I don't want an iron condor right here because I do think, and again, this is an embarrassment. Chuck Schumer is an embarrassment. Hated that guy's speech. But there's only two guys confirmed right now. President Obama was elected or taking the oath there. He had 7 people confirmed. Republicans might not have liked them all or whatever. They gave deference to the president and had 7 people confirmed. We have 2. So if Chuck and Nancy are going to do that for the next 8 years, they'll be in the minority until they leave. So I like a bull put spread right here. You see half the give back right here is about 22.55. So let's go. Let's take a look at this Feb 3rd, 22.55, 22.50 bull put spread. I think it was $1.20 before I jumped on the air here. And see if it still is, because we're just kind of, it still is. We're walling around here, which is fine. Again, we're waiting for action. The market doesn't like unknown. It usually pulls back on the unknown, but the unknown is known now. The guy's president. Knock on wood, by midnight tonight, no massive terrorist attack around the world because of his inauguration. Nothing super bad happened in Washington, D.C., except an example of horrific parenting and just some people who want participation trophies. So I think we made it out of the woods. So the market's going to start looking for certainty and action. So I still think we channel to the right a little bit. So this bull put spread is a nice way to put that on. And here's the remember, as my computer's freezing up a little bit here, remember that during the life of this trade, this bull put spread, it could lose money. We could pull back. We could I have no that there's no way I could not think that this thing stays above 22.55 the entire time. All I want this trade to be is above 22.55 by February 3rd. We'll talk about adjust and eject in a couple seconds here, but as long as the trade finishes, past the goal line by that date, we're looking pretty good. So this looks like my standard bull put spread on SPX, risking $5,500. This is the first place our eyes always go, is max loss there, $5,500. If I'm not okay with that, if that's above my personal SOP, standard operating procedures, I don't trade it, or I lower the contracts, or I move the strikes around. You cannot go on a mission unless directly ordered. That's a kamikaze mission. If you're like, wow, if I take that loss, I'm done for, then you do it, then you deserve to be done for because you're an idiot. So don't. I'm okay with that. It's a little north of my SOP, but that's right in my ballpark. Now I can look at max profit and go, okay, now what could I potentially gain? I could potentially gain $2,000 on a risk of $5,500, $5,600. That's good with me because looking at the money volatility is 66%. That's a decent trade. And our break even is below that hey, we're back up to where we are before the end of the year by a couple bucks there, with a 68% probability of at least breaking even. So let's go ahead and get this one on. Market's starting to give a little bit back here. S&P's down 3 right now, so we might even get $1.35 on this. Again, during the life of this trade, could we be, quote, losing money? You don't lose money until you close a trade. There's some people who, try and play stump the chump with me with that. Oh, there's a negative on my screen. Okay, if you close it right now, you'll be losing money, but that's not right now. Did you close it right now? So $1.35 it's what we're bopping around right now. Let me get a new screenshot. So $1.35 is literally $2,000, and it's a little less risk. So, and it's a Friday, folks. Markets tend to do what? Slide into the close on a Friday, especially in this new world order where, who knows? Wiz, you were wrong about any Trump Tower around the world getting attacked today. Yeah, I was. And then Sunday, a bunch of them get attacked. So God forbid, again. But that's why we're seeing a little bit of a sell-off. I did all my calls this morning, and everybody thought the same thing. If it's quiet today, what about the weekend? So a little bit of selling off here, which gives us a potential entry point there. Okay, real quick, the exit point or the eject. If this thing went up in value to 270, we're on fire. They're smoking the cockpit. Our wingman's screaming to get out of the airplane, eject, eject, eject. That's probably where we want to take our max loss and give the jet back to the taxpayers. But around the $2.40, $2.30 point is where I'd look to adjust it. I scratch my chin and I go, okay, why is the S&P 500 going down and this trade moving against me? So I could either roll the trade down a couple strikes for the same expiration, February 3rd, or if I scratch my chin and go, you know what, I still think we're going to pull up above this 2255 point. It'll be next week for X, Y, and Z reasons. So I could roll the trade out using the same strikes to the following Friday. Or, as many of you know, I could do both. I could roll the trade down a couple strikes to the 2250, 2245, and then out to February 10th. Now, or you could use your adjust point to be your eject. Man, Wiz, we are on a kamikaze mission. I'm not going to wait to my eject point and lose even more money if I know we're in a tailspin. Get out, use your adjust point and your eject point as the same thing. Okay? If you're sitting there going, well, which one are we going to do? Folks, my call sign's Wiz, and that's a 10 drink minimum. I'm not Nostradamus, so I can't tell you why a week and a half from now SPX is going, the S&P 500's pulling back. If I did have that mental capacity, I'd be running the world's largest hedge fund of $1 quadrillion. Nobody does. So this is why we call this a brief, right? Our live trade briefs or all this stuff. I call it a brief is because I already briefed you. If down the road, Wiz goes completely radio silent, I gave you the 4 things you could do. Roll it down, roll it out, roll it down and out, or get out. Those are the 4 things. If I go radio silent, one of the 4 things you're going to have to do. I'll show you what I'm doing. I'm not going to be radio silent. So you have to make that decision as pilot in command. All right, so I've briefed you on the 4 things we can do if this trade goes against us. Now, Eeyore, enough with all that stuff. What about the good? It seems like I'm always talking about the bad in trading because, or Wiz, you're super pessimist. You have to be, folks. As a Hornet pilot or a trader, always be worried about what bad could happen. So when you look at your account and you're up $2,000 on this trade by the time this expires, you're pleasantly surprised and you're even more happier. If you start out of the gate like, Wiz, I'm making $2,000 in 2 weeks. Nice job, my friend. Oof, that makes my skin crawl. Now you got me worried and we're jinxed and I don't want to go on this mission. Okay. So, and we're already, like I said, man, as I'm talking to you, we're starting to pull back here. So let's go $1. I'll do $1.35 plus or minus 10 cents, okay? If we kind of go negative here, you might want to keep your powder dry a little bit to next week. During me shooting this video, I told you the market tends to sell off into the close. It's 2:25 p.m. I need to get this texted out to you. I fully expect a little bit of a sell-off here, so that's why I'm putting this one on, okay? I don't think we're going to go below that Moose and Rocco brought us down. I think that's a nice technical line that I confirmed with on a couple calls today. All right, so let me get this text alert out to you guys. I'll get the video rendered and put up on the urgent alert page here in a little bit. So I'll get the text alert out now, the screenshots of the trade out, and then I'll post the video on the page that you're already watching. Okay, urgent alert. done for the week. We have Full Throttle next week. I'm going to be inviting literally thousands of new traders of all skill levels to come to Top Gun in our Full Throttle program. So no, we'll be on GoToWebinar since Go to Training, I think, was great this week. That was another debrief point. And now you guys can see each other's comments. I don't have to read them, and it saves a lot of time. I saw a lot of people, good mutual support. I've always had to read the mutual support about people helping each other out here. Now you can see it. It's not like I sat here and make up comments. Now you can see what I've been seeing for years, and I'm really happy. But we can't use Go to Training next week because it only holds up to 200 people, and our Go to Webinar holds up to 1,000. So we have to use those the bigger room for the promos. Okay, so I'm going to get going. Happy hunting. Make sure you hedge. Have a great weekend, and I'll see you guys Monday night for Full Throttle if you want to come. I know it's the INDOC one, so I talk about me, our history, our ethos, our strategic, operational, tactical, and then kind of the two fear 2017. Added a little to the alphabet soup under each one of those letters. So if you want to stop by Monday night, you're more than welcome to join. Okay, folks. God bless and have a great weekend. God bless America.